Hi, it's Steve and Joe from Freshagenda. And Steve, it's been a few weeks since we've done a video. We've had a 3-week break in the GDT, but we're back.
We haven't had a break. We've
still been here.
But yeah. So this time, let's go back to the little chart we used last time about what's changing, because we've put out an outlook and we're pessimistic, rightfully. The GDT event from last night, our time.
Yeah, which was a little bit hopeful.
But
we'll go through that. And then, of course, everybody's favourite child.
The suspense builds. So talk us through some of these, Joe. I mean, I think we could talk about some of these.
We could.
Have a conversation.
We could even have a conversation. But there's some items there. Black is positive. Red is negative. So we've got these big picture items still out there. The grinding on of the conflict in Ukraine, which is still pushing up the price of feed and oil, and
it keeps a tension in that, doesn't it? I mean, I suppose it just keeps a solid bottom in it, even though some feed prices have fallen recently because of some different views on the global situation, but also there's also some weather events which are not making it easier.
Yeah, like here in Australia, we're expecting a bumper crop, and a lot of it's been wiped out by flooding. So the US dollar is sliding, which is a positive for commodity prices, but there's sustained pressure on household spending and some interesting differences in different consuming regions, aren't there, about how people are responding to that. Still this glimmer of hope that China is going to reopen and come out of its COVID zero phase.
And I suppose we've got that in the big picture line, because it's more the wider economic effects. If it reopens slowly, and it's going to remain a drag on the region.
Yes.
Does that have a bigger? Yeah.
That's right. And that, that Southeast Asian region's very important, obviously, as well, in terms of balancing global markets. US recession looming. Wall Street very gloomy about 2023. And then there's some specific dairy things in there. There's a little bit weaker US growth, but in Europe, milk is really surging, isn't it?
In a number of places. It's this sort of late season flourish in pasture, which is really building momentum. It won't last long.
No.
But it will put more feed in bunkers during winter. It does take away some of the risks that we've talked about, is the quality of what was cut earlier and stored earlier going to be a problem? Well, every time we see stronger numbers published, there are extra cuts of silage being stored, which reduce that risk. On the right hand side, though, that fertilizer cost issue is still
very uncertain,
hanging over things, and it's hard to get a concrete view on just how much of an impact that has. Of course, it depends on weather and what the winter's like, etc. So that's quite hard.
Still one to watch. And then we're expecting a fairly even, as China does reopen, it's going to be a slow recovery in dairy, we think, just given where they are with their inventories.
We saw some new data on that. We're not covering that here, but that's getting a little worse. Because I think something we included in that, because this, while there's the moves to open things, it's been a different, the West is looking at this and saying, oh, they'll reopen, we'll see demand price back. Reopening actually brings more fear, and does it actually mean people move around more? I think the risk is that people are more fearsome of contracting if things are opening and people are moving around. And so we're seeing the mobility actually decline quickly with those signals that, we're going to be changing. So it's probably going to get a little worse. And we think European domestic demand is probably the worst part of that impact on spending. But let's move on to GDT, which
apart from all that gloom, up price index was up 0.6% for event 321, and we've got a bit of a mixed bag there, Steve. Pretty good for skim. Whole milk powder holding despite a bit more volume on offer. AMF still good value and did pretty well, and butter well down, and cheddar was okay. So, you know, against that backdrop, what we've got going on in some of those other indicators, it's really not a bad result, is it?
Yeah, it was. I mean, we've seen prices basically sliding in other regions. Weight of milk in Europe is a factor, and I think Europe is weighing on the US, particularly for skim powder or non-fat, and the US cheese market staying pretty balanced.
Yeah,
a little weaker. You know, that I think the cheddar value there, and the fact it's gone sideways in the quotes. The rest of the cheese market in Europe is quite a lot weaker. So
that's right.
Just some of those things we're seeing around the US front. You know, the front contracts have got a bit weaker there. That's on demand fears. Not a lot of talk yet about what happens out in the middle of the year, or even, you know, the end of Q2, because the margin outlook for US producers is getting a lot weaker.
Yeah.
And the price is about to crash. So we're going to see, you know, with the costs of expansion, you know, also a lot higher, and the cost of money rising all the time, then that growth out there is going to be pretty tough. And maybe it's the fact this is a sideways line. Maybe it's the fact that there's thoughts that the recession impact on demand might counter that. But skim milk powder a little weaker everywhere. But look, interestingly, this bottom chart before the event, you know, the future showing a strong premium for New Zealand product, which got echoed in the result we've had overnight. This dip here and this hole in Q2, Q3, Q4 could get a lot worse if that European milk continues to grow. We'll talk about this later.
Yeah.
There's a risk there that it gets bigger.
Yes.
And probably pulls New Zealand down. Little Pulse result last week went down. So this defied that, so it should be positive. Demand was generally a little weaker than average. As you can see, whole milk was the better, but it depends on what happens through the event.
Sure.
So whole milk was flat, really a flat result.
It fell away quickly from that starting point. Didn't it?
And it's compared to last time, so it was a much weaker outcome. Skim milk powder very similar.
To last time, yes.
To last time, we've seen the inversion of fat prices continue. Back to, I think it's like 15 months since we've seen the premium for AMF that big.
Sure.
So I'm sure that's interesting to someone. So some of the trends in buying, skim milk powder was a positive. I think there's some positive news. The volumes were a little lower for China. Southeast Asia stepped in and increased. I think whole milk powder was the most positive part of this show. Yeah,
again, you were saying that China increased their proportion of buying on a larger offering. So they have come away with more tonnes, which is pleasing given the background.
So there's confidence. Should be a little higher. And a couple of the outsiders. Latin Americans been buying a lot more AMF with the good value on offer. And likewise, Middle East buying more whole milk powder. There's more room for them.
Sure.
Chart of the week, Joe.
Well, chart of the week, coming back to Europe, and as you were saying, Steve, fairly weak pricing for product within Europe. And you can see there Gouda and mozzarella well down. So again, we've got this weakening demand within Europe, but also really surging milk production in some of these key producing regions in that right-hand chart there, which is obviously of concern, and it's going to push more skim milk and butter out the door than a lot of us were expecting.
Yes. Yeah, the cheese output will try to pair back to demand, and it's going to be flat at best. But yeah, that's some of the numbers coming out of individual countries. Pretty scary. Ireland posting more than 7%. Germany weekly numbers, which never seem to translate into Eurostat data because they're probably picking up some milk crossing the border. But they're up, 3 and 4%.
Yeah. which we haven't seen for quite some time.
No, Netherlands up. This is a short-term effect. While the feed's there,
and on really bad comparatives,
Yeah.
we should hasten to mention. But yeah, that's really overhanging the market, isn't it?
It is, and it will do so for a while. And they've got very good milk prices, which, you know, it's a case of who blinks first in milk prices, because no one wants this. As I heard someone tell me this morning, no one wants to be the first to back off these high prices.
That's right, because input costs are still right up there, aren't they? Nobody wants the tractors in the towns.
No, no. And they've been rolling in quite often in the Netherlands, but please, no more reasons. Okay, that's a good wrap.
Yes,
all right.
We'll leave it there.
We'll do that and chop it off, and we'll see you again probably one more time before Christmas. Thank you.